Greetings. My name is Gino Mabetere, and I would like to do this recording for CTA and IAC candidates for the ICAS examinations leading to the qualification as a chartered accountant. Now, the learning outcomes of this session have to do with an overview of when VAT arises, particularly to do with the supply by a registered operator of goods or services for the purpose or in furtherance of trade. That's the particular section 6.1a that we want to deal with. So we'll have to deal with these things in their component elements: supply, registered operator, goods or services, trade, except of course the supply of secondhand motor vehicles. So let us look at an overview of output tax. Output VAT arises when we need to know when it arises. Once we know when it arises, we need to classify that supply. And if it is classified as standard rated, we'll need to go further and say what is the value of that supply and the time of supply. So output VAT arises only when either there's a supply of goods and services by a registered operator in furtherance of a trade, which is section 6.1a, and that's going to be the subject of our recording, of this recording. But VAT, output VAT, can also arise, it's called import VAT, when there is imported goods, or when there is imported services, or when there are goods sold through an auction. These are the circumstances under which VAT may arise. Once we have established that VAT does arise, we'll have to classify it, and it's either standard rated or zero rated or exempt. If it is standard rated, output tax or VAT arises at 15%. If it is zero rated, VAT arises but at 0%. If it is exempt, no VAT arises. And we'll see the difference between a zero rated and an exempt, especially when we do input tax. So let us look at section 6.1a, which is the core of what we are looking at today. 6.1a says of the VAT Act, it says the supply by any registered operator of goods or services supplied by him on or after the fixed date in the course or furtherance of any trade carried by him. This shall not apply to second-hand motor vehicles. So let us break this definition down, deal with the bolded items to say, so what is a supply? What is a registered operator? What are goods? What are services? What is this fixed date? And we're not going to worry too much about the fixed date because it's the date in which the VAT came into effect in Zimbabwe, and that must be sometime in 2004. And in the course of furtherance of any trade carried on by him, so trade is going to be very important. Because if you don't know these things, you will not know whether VAT must arise. So let's start with interpreting supply. Section 2 is about the interpretation of different terms within the Act, and it interprets the term supply by saying supply includes all forms of supply, irrespective of where the supply is effected and any derivative of supply which shall be construed accordingly. So it tells us something like, if I give you something, my pen, my calculator, I have supplied. It's all forms of supply. So to give is to supply. To donate is to supply. To deliver something to someone, you've supplied. So it's all forms of supply and derivatives of supply, where you can be viewed as you have supplied. Let us move to the next critical definition. Registered operator. What is a registered operator? We've been told that unless you are a registered operator, under 61A, we cannot charge VAT. So let's look at registered operator means any person. So this is in section 2 for interpretation. Any person who is or is required to be registered under this act. And what's going to be very important here is, under the act, people can come voluntarily for registration, or they can be compulsorily required to register. And there's a prescribed amount which you have to, which you'll be compulsorily registered if you reach that prescribed amount of 25,000 for category A and B VAT vendors, or its ZWG equivalent. When it's category C, the prescribed amount becomes 240, and category D 120. So what we're saying here is, you are trading, and your trade over your sales, or the amount you're getting from your supplies over the preceding 12 months, or expected over the next 12 months, will reach these prescribed amount or these thresholds. Then in that case, you have to be registered. So let us look at the exceptions under which, even if you reach the prescribed amount, you will not be compulsorily registered. If you are a supplier of exempt supplies, even if you reach these prescribed amounts, you will not be compulsorily registered. You are not required to be registered if you are supplying exempt supplies. You have to be very careful there. Some have mixed supplies. The exempt supplies portion is not counted when you're looking at the prescribed amount. But if you have other supplies that are VATable and they get to the prescribed amounts, or are expected to hit that threshold within the next 12 months, then in that case, you are supposed to be compulsorily registered. And again, now remember, this is the difference between exempt and zero rated. If the zero rated as well are going to be, the zero rated sales will be counted with the standard rated. Traders who will solely be dealing in exempt supplies, any person conducting private or recreational pursuit or hobby, you're not required to register, even if your supplies, in terms of the value of your supplies, exceeds those prescribed amounts. Any services provided by an employee to his employer, or small traders whose taxable turnover is below 25,000. So if a taxpayer reaches the prescribed amount but doesn't register, they are compulsorily registered and become liable for VAT with associate penalties and interest from date of compulsory registration. In your examinations, if the scenario is silent in terms of whether the person was registered or not, but you can tell that the threshold, the prescribed amount, was exceeded, you must treat that taxpayer as a registered taxpayer. So let's look at requirements for registration. You've got to have, you must go to Zimbra and register, and you are given a number. Payments for all taxes must be up to date for you to then become registered. Otherwise, you don't get a tax clearance. Sales schedule from the time of commencement of trade to date so that they can do the validation of these prescribed amounts and thresholds. A sample of sales invoices showing customers' names and telephone numbers or confirmed and signed contracts, sales projections for the next 12 months, current stamped bank statement, letter appointing public officer, valid lease agreement. So all these things are then requirements from Zimra, and you can visit the Zimra website to show you the things that will be required for you to register. And moving on to goods or services. Goods are defined as corporeal movable things, fixed property, and any real right in such things or fixed property, but there are exclusions. So if I give you money, those are not goods. Securities are not goods. Any right or interest in goods, property, or a service that is not transferable. So securities, you're looking at bonds, treasury bills, those are viewed as services and not goods. That's very important, because when we further down the line, when we're now doing classification, you'll find that certain items may be exempt as services but not exempt as goods. So for example, medical services are exempt, but medical goods are not. Financial services will be exempt. So to know whether these items are goods or services is going to be very important in spaces such as classification of the supply. So those are the rest, and as a candidate, you need to be reading that list of goods and services, or exceptions to those goods and services. So let's look at services. Services is anything done or to be done, including the granting or assignment, cession or surrender of any rights, or the making available of any facility or advantage, but excludes the supply of the following things. If you've supplied goods, then it can't be services. So here, there can be confusion. So for example, if a man decides to assist people by collecting firewood from a nearby farm, what are they doing? They can claim that I'm providing services of transporting firewood from the farm or from the woodland to where people are. Or they can be doing two things: cutting and looking for the firewood. So they're supplying firewood, which are goods. And then they're also supplying a transport service using their cart, ox-drawn cart, a car, or whatever. So if you split those two things, you could easily have two supplies, which is the firewood themselves and the service. But if once everything has been packaged as a service, then they can't also be goods. Money. So you remember, under goods, money was definitely excluded. Now under services, money is also excluded, which means whenever you give someone money, you have neither given them goods nor have you given them services, and therefore no VAT will arise. Because remember, we are doing all this because VAT must arise where there's been a supply. Yes, I've supplied money, but the supply must be by a registered operator. Let's assume I am a registered operator of goods or services. Now, money is neither goods nor services, and then it stops there. So VAT will not arise. And then any stamp is collected in paragraph C of the definition of goods. So let's look at, it excludes, 61A excludes second-hand motor vehicles. So you would need to define second-hand motor vehicles. And Section 6 makes reference to Section 172 of the Customs and Excise Act. This is very important because the loose understanding of second-hand motor vehicles would be pre-owned. to say someone will call any vehicle that was once owned by someone else second-hand. But that is not how Section 172B of the Customs and Excise Act defines it. So you would need to go and look that up. But this is why you find that when it's a registered car dealer selling a car, or even a pre-owned car, VAT may then not arise. And when there's a foreign car dealer, but you are importing, VAT will arise. Yet that car has been pre-owned. So in Zim, your ex-Jap cars, we call them ex-Jap because they are being imported maybe from Japan. Although it is pre-owned, but it is not second-hand for the purposes of VAT under Section 172 of the Customs and Excise Act. Trade is the last major component of whether VAT must arise. And we are saying trade will include continuous or regular carrying out of an activity, and the person carrying out the trade must be carrying it out in Zimbabwe or partly in Zimbabwe for a consideration whether or not for profit. So this is very important because in your examinations you will be given a scenario where someone does buy something and sells once off. That's not regular. For example, if I go to Kariba, do a bit of fishing, my neighbor then says, can I have some fish, but I'll pay you. And then I haven't done it regularly. It then is not trade. But once it's not trade, I cannot then create VAT, even if I'm a registered operator. I have supplied, it's goods, fish are goods. The person carrying out the trade must be carrying it out in Zimbabwe or partly in Zimbabwe. So if you carry a trade outside Zimbabwe, then no VAT in Zimbabwe arises. It must be. So imagine when we buy motor vehicles, the ex-Japs I was talking about, you then don't say, the dealer who is in Japan does not raise Zimbabwean VAT. VAT is actually raised at import by the state, not by the trader, because they are not trading within Zimbabwe. It has to be for a consideration. So consideration can be in the form of money or an exchange of goods, whether or not you're doing it for profit. VAT will arise. So trade excludes every time you're doing it as a hobby. Any amounts that where goods and services are exchanged under a contract of employment. So for example, I am offering employment services and my employer pays me for that. I cannot raise VAT for the services supplied. Even if I'm a registered operator, I have supplied, it is for a consideration. You also can't, it is not trade when suppliers are made to an independent branch outside Zimbabwe. So you can have branches trading or exchanging stock. It is not trade, even if it's happening outside Zimbabwe. Within Zimbabwe, clearly it's just within the same organization, so there's no trade. It's just movement of stock. But if you move stock from one entity in Zimbabwe to another, but then it's a branch and that branch is independent, then again we're saying it is not trade. And then lastly, exempt supplies are excluded from the definition of trade. So you remember we've already touched on that once something has been classified as exempt, you are not trading, which is why, remember, you are not even expected to register for VAT because you're not trading. All right, so that's a quick summary of when VAT arises using Section 6(1)(a).